The real estate bubble has popped. 2 days ago, I wrote a post where I speculated that because of a large number of price reductions occurring in just one very hot residential real estate market in Arizona, it was my opinion that the entire U.S. market had topped out and is now ready for a downward move of a substantial magnitude. Well, for the last couple of days, I've been looking for other market indicators to confirm my theory. I've now found those indicators, and I must say, without hesitation, that we are now in a topping out phase for one of the craziest residential real estate markets that I've ever seen. One of the most talked about inflation indicators has been how crazy the price of lumber has gone up. Well, just yesterday, I noted a Wall Street Journal article where they pointed out that the lumber price in just the last 6 weeks has taken a 41% decrease. The magnitude of this decrease in just the last couple of weeks would indicate to me that the lumber market has much further to go on the downside. But even at today's prices, the cost of lumber is still many times what it was in a normal market. There are quite a few proponents of the theory that real estate prices would continue to escalate for at least another year or two, who use the price of lumber as a basis for their argument. Now, with the dramatic downturn in the lumber price, their theory of continued escalation in new home prices has been, or soon will be, totally obliterated. Now, if we look at building permits, we see that they hit their height back in January. They've come down slightly from there in each preceding month. On building a new residential property, it's usually about 6 months after the issuance of the permit that the property would be completed. So basically, in the next few weeks, we're going to see more properties hitting the market. Now, when you look at the graph of homes on the market, you'll see that even though we are experiencing a terrific supply imbalance, the amount of housing inventory has been steadily increasing since January. If you look at all these indicators, at least in my humble opinion, there can be no doubt that the residential real estate market has put in a top and the new pricing trend is going to be down. As I said in my prior post a couple of days ago, pointing out the number of price reductions in properties in the Prescott Valley, Arizona area, this is just one indicator of trouble for our overheated residential real estate market. Looking at the other indicators that I've pointed out here, in combination with the real-time beginning of price reductions for asking for existing homes on the market, I can confidently say that what has been the greatest appreciation cycle in residential real estate that any of us has ever seen in their lifetime is over. Sure, we're still going to see some minor continued appreciation because we are in the froth or culmination of this mega trend. I believe very shortly the main topic of any real estate conversation will not be whether or not the market is headed down, but how quick and to what extent housing prices will fall. Looking at the huge tumble that I pointed out in the lumber market, I think any of those that will soon be predicting just a normal or mild correction to the residential real estate market will be proven to be totally out of touch with reality. Keep in mind that I have not even touched upon when and if the moratorium on rental evictions expires, the huge amount of properties that are surely going to be put on the market or forced into foreclosure. Naturally, this is just my opinion, and before making any decision on whether to buy, sell, or invest in real estate, you should always consult your own legal and financial advisors. But be sure to tighten your seatbelt, because a crash is just ahead. For information about the current condition of the San Diego residential real estate market, be sure to visit brokerforyou.com. The 4 is FOR and the U is YOU. Hey, thanks.